All right, this is a important highlight because it brings in a lot of education with correlations and ancillaries and when to watch something and when not to watch something. So we're just sitting along here and all of a sudden we're drifting sideways to higher, and then bam, we pop. And right with that pop was correlated with a headline that dropped down the wires that said that Trump is looking to curb chips, NVIDIA chip curbs on UAE as Trump plans a visit. U.S. weighs easing NVIDIA chip curbs on UAE as Trump plans a visit. Now, right with that, it's not like you heard that headline, goodbye to ES and life is good, but right away we were able to attach a reason for the pop. So that's bullish for NVIDIA, which is a big enough stock to drive and make it bullish for the NASDAQ, which is down here, and the ES, which is up here, right? So what we do then is I pull in my my stock layout, my Mag 7 layout, which on this side of the layout, I just pulled it into the screen share, is NVIDIA right here. This is price ladder on that stock where it's trading 114.57 a share. It came from 113.40. That's where it was trading when this headline dropped. Spiked a dollar, was enough to spike the ES there and the NASDAQ there. So now what's important, this might only be good for 10, 20 minutes, but this stock, number one, is a big enough stock to drive and influence the indexes. And number two, something just came out that was specifically going to affect this stock, and it did. So now you need to watch it, at least for the next several minutes. Why? Well, if you're looking to get long for whatever reason, and NVIDIA doesn't go up, it might be hard for that long to pay. If NVIDIA spikes and the NASDAQ and ES do not spike with it, that's a head scratcher that, well, if it was strong, it has the reason to rally. It just went up within a moment ago. Why isn't it rallying this time? Would be the questions that come across your mind. And so if I fast forward it, you're going to see the pop happen right there to 94. All right. It just not real fast, 10, 15 cents maybe. But then look at the chart of the NASDAQ right here. Look at the chart of the ES right here. It's not making higher highs, but NVIDIA just did. All right. Let me just back it up a second. So it goes from 75 to 85 to 94. And then again, you don't get the subsequent rally in the ES or the NASDAQ. And so then the thing is, hey, if I'm long, I'm not comfortably long. If I'm not long, I'm not using anything for a trigger to get me long. In fact, it's taken me away from my trigger. I'm backing off executing a long position because it didn't go up just moments ago like it should have. And so if we play this thing, you could see NVIDIA's come off right now 20 cents. But there was a moment in here, if we can catch it, where it really got cracked pretty nicely. 15, 20 cents in one swoop. And that's the moment to make sure, if you're an NASDAQ ES index trader, you're aware of that. Again, if it's just banging, if any stock's just banging around, not important. But when you see something move or flash, it's got to catch your attention. If it's XYZ stock that doesn't matter, then it doesn't matter. It's not going to influence the indexes if it rallies 25%. All right. So why watch it? If NVIDIA isn't influencing the E, why watch it? But when a headline moves NVIDIA, which can move the indexes, needs to be watched, including earnings. When earnings come out, it's important to know that because it's going to move that stock around. Even if earnings don't miss, the stock generally moves, especially if it's a bigger stock and a lot of people are interested in it. So it's important to know the movement of some bigger stocks because they're going to influence the product you're trading. Here, you see this thing get cracked? If you're bearish, take a shot, you get short. And then watch to see if there's follow through to the downside in NVIDIA and then a head start in the short you just opened. Now, if you're already bearish and it's in an area you're thinking is resistance and you want to get short and short it there, then Boom. That's your fire in a ready, aim, fire progression. You've got your rifle up, you got the deer and the crosshairs, but there's some tree branches in the way, and all of a sudden it walks just to the left of those branches, and you got a clear view. You got the distance. It's either take the shot or stop hunting. Now, that's again, if you're bearish already in here where my cursor is, or over here in the NASDAQ, and then you see this in NVIDIA, not just go down, couple things lined up here. Moments before it got cracked and went lower, it jumped and made a higher high, but the ES and NASDAQ did not. Then it comes off 20 cents and gets cracked another 20 cents quite quickly. The ES and NASDAQ follow it, or at least directionally a little bit better. This isn't about getting home runs. It's about getting head starts. It's about having a better feel for what's going to happen in your market that doesn't feel so random when there's good correlations. And so it's like if two things go up together, go up together, go up together, and then all of a sudden one goes up and it's not going up together anymore, that has to get you to ask a question. A good detective would say, hey, wait a second. They were telling me the same story, and now one person's story doesn't match the other, right? Now they're onto something. That should be obvious if you're doing police work as a detective. Well, what's obvious is trade detective. That's what we are. We're just trying to get clues as to where the hell price is going to go in the next 2 minutes, 3 minutes, 2 hours. We're detectives. Correlations, when they correlate, but when they break down, called divergences. You're not necessarily going to be able to trade with your toes and put the mouse on the floor, trade with your feet. It's not that easy of an advantage, but hopefully you can make sense to understand why it would indeed be an advantage. And with us being able to pull different stocks in and look at charts to see which one's the strong one in the Mag 7, which is, obviously maybe there's news that comes across, earnings or whatever, and it's a mover that day. You could pick one of the Mag 7 stocks that are more important than the other six and maybe watch that a little bit more closely. But you're also privy to all the important stocks. And then also there's stocks that aren't important 364 days, but on one day it is more important for whatever reason. It could be, and I'll give you this quick story about the financial crisis in 07 and 08. There were different stocks every other week that I never heard of, but the market was following that stock. And it's just symbols that I couldn't remember. INTC, Inca something mortgage back in 2008, I think. And it was like, man, that stock is going to zero. But the point is, every time they hit that stock, you could get short the Dow, the NASDAQ, the S&P, and get a head start. So we were following certain Fannie Mae, Freddie Mac were two symbols that were important to watch at one moment. Countrywide was another one. State Street was another one. So it was just like, if you weren't watching those stocks, fine, but you were missing an important clue as to what the hell's going to happen next. And everybody wants location, which you should. Best location to get in, best location to get out. But then they just drop and ignore one of the number one things we use to value price, and that's compare contrast. Everything you buy or sell, you've used that technique and the concept of comparing it to something else. Why is it ignored so much when you open up a trading account? Because it is.